Okay, the webinar has started. Good morning, ladies and gentlemen. Thank you for your patience. We apologize that this is starting a couple of minutes after 10 a.m. as there was a tiny technical glitch. So very warm welcome and very good morning to all participants. My name is Yvonne Ng and I'm the head of sales at Elliptic APAC. It gives me great pleasure to be a host for today's event. Today's webinar is about the good, bad, and ugly of compliance. And the event is proudly brought to you by the Banking and Finance Services Union, Elliptic, Blockchain Association Singapore, and Global FinTech Institute. I think we are having some participants who are streaming in, so I'm just going to pause for a minute or two just to make sure that we allow everyone to come in, and then let me do another intro in a few minutes, and then we'll officially kick off. So thanks for your patience. For those of you who have already joined us, just hang in there, everyone. All right, ladies and gentlemen, thank you so much for joining us and thank you for your patience. For those of you who have joined us earlier, it looks like we have a great crowd now. So once again, good morning and a very warm welcome. My name is Yvonne Ng and I'm the head of sales at Elliptic APAC. It gives me great pleasure to be a host for today's event. Today's webinar is about the good, bad, and ugly of compliance. And this event is proudly brought to you by the Banking and Finance Services Union, Elliptic, Blockchain Association Singapore, and Global FinTech Institute. With the increasing demand by regulators around the world to introduce clear compliance requirements to the digital asset industry, there is no doubt that we need more compliance professionals. And with more compliance professionals being keen on this exciting digital asset industry, what we want is to provide great training programs to equip them with the right knowledge and skills. So recently in April 2021, some of you may have joined us for the MOU event. Global FinTech Institute, Blockchain Association Singapore, and Elliptic we inked a memorandum of understanding to roll out a digital asset compliance course. Since then, the parties have worked closely together, and it gives me much pride to share that today we are officially launching the Digital Assets Compliance Foundation course. So everyone, please join me in welcoming Mr. Patrick Tay, NTUC Assistant Secretary General and Executive Secretary of the Banking and Finance Services Union, to kick off the launch. Patrick.
Yeah, thanks, Yvonne, and a very good morning, or good afternoon, or good evening, depending on which part of the world you're tuning in from. And it gives me great pleasure to join all of you here to open a session. Yeah, I won't steal the thunder from the panel which are gonna be speaking later. They're gonna bring you up to speed to some of the happenings and the latest trends, and of course the program itself. And a big thank you for Blockchain Association Singapore, in particular, Brother Chow Lai, for inviting me to do sort of an opener in today's event. In case you're wondering, here in Singapore, the financial sector, or should I say the finance community, works very, very closely together. We have a very strong ecosystem. You can see the likes of the Singapore FinTech Festival, and of course, many of the initiatives, including many training programs, support measures to help workers, companies, and businesses not just thrive, but also stay, in particular, workers stay employable, and of course enter this industry and be equipped with the knowledge to keep pace with the changes. So here I am as a representative of the labor movement, as well as the Banking and Financial Services Union. Depending on which part of the world you're in, you may think wondering why someone from the union is speaking here. Actually, we work very closely in Singapore from a tripartite perspective. The regulators, i.e. Monetary Authority of Singapore and Institute of Banking and Finance, which is a trading arm or entity of the MAS. At the same time, also Blockchain Association of Singapore, representing many of our fintech, blockchain, and related companies and this community. And of course, the Banking and Financial Services Union, we are concerned more with workers and everyone in this community. Why we're in this partnership between Blockchain Association and BFSU is because we see the value of partnership, in the sense that we want to build and support this ecosystem and this community. I think I can't emphasize more the importance of community building, particularly in this space. As you know, this space is a growth area. Singapore is in more ways than one putting a lot of resources in the financial sector, and especially in the fintech sector as well. And of course, blockchain, fintech is just a generic word, but within the fintech space, we have blockchain, we have, I know now the big word is not so much fintech or blockchain, but tokenization and digital assets. So that's why we have today's program launch. At the same time, also, this space is something relatively new. Many people who are not in this space may not be totally aware of what's happening and want to find out more and want to keep pace with the knowledge in this space, because they hear so much, not just from the social media and not from the virtual space, but particularly during this COVID-19 pandemic in the last 18 months. I think tokenization and digital assets is going to be the next big thing. We also know crypto, yes, well, there's some level of conservativeness in Singapore, particularly with the big institutions on embracing this totally. But gradually, as you can see, if you read the newspaper reports, I think there's more regulatory sandboxes. There are more incubation programs as well as innovation programs to see how we can, gradually adopt this space. Because I know some of you operate in jurisdictions where it's quite big, particularly in this tokenization and digital asset space, including blockchain. And maybe our resident experts in more ways than one. And some of you own some of these firms or are working in some of these firms and want to keep pace with some of the knowledge. And I'm glad to, earlier on, touching base with the panelists, we have, the experts in this space. And of course, today we are launching the program, and I congratulate BAS for the launch of this program. Like I said, in BFSU, or should I say in the labor movement, we are very, very passionate about wanting to embrace learning, training, as well as upgrading. At the same time, also allow opportunities for those who want to move into this space, particularly workers who want to move in this space. They could be from currently working in the financial sector, in a large organization, or even in adjacent sectors in the finance function or even in the IT function, who may be very keen to pick up some new knowledge so that to explore and also, of course, make a value assessment of themselves, whether they should enter this space. So I think I congratulate the kickstart of this program, and in fact, when I saw some of the key syllabus or topics that's going to be covered, it's quite exciting space. We all are very, very familiar with KYC, AML, but well, this is in a different domain in the digital asset space. So I think it augurs well for us to support this, and I look forward to actually partnering with many of you. I know many of you out there are owners of companies, many startup fintechs, or even big names, and therefore, like I said, if you are situated in Singapore, do work closely with the community. Do connect with BAS as well as when you're connected to BAS, you are naturally connected with BFSU because we are in partnership for most of the initiatives and the community building process. So let's be in that journey together. And I congratulate the kickstart this program, and I look forward to more programs, and of course all of you supporting the entire ecosystem in this space. Thank you very much.
Thank you so much, Patrick. That was extremely encouraging. And we understand that many of our participants here today are very eager to learn more about this Digital Asset Compliance Foundation course. So even before this event, we already received numerous inquiries about it. So without further ado, let me invite Chia Hock Lai, Co-Chairman of Blockchain Association Singapore, to share the details. Over to you, Hock Lai.
Okay. Thanks, Yvonne, for the kind introduction, and Patrick for the wonderful opening to congratulate the launch of the course. Let me try to share my screen. I have trouble sharing my screen. Jia Hui, can you check? Seems like today the sorry, I have some technical problem in sharing the screen.
Hock Lai, let me try and see if I'm able to help you out here.
Yeah, okay. Now I'm good.
Okay.
Yes, you are seeing the screen, right? Okay. Good morning, good afternoon, and good evening, wherever you are. Today, we are pleased to announce the launch of the Digital Assets Compliance Foundation course. Since announcing the collaboration with Elliptic, with Global FinTech Institute, and with the Banking and Financial Services Union in April. In fact, this is the first part of the two-part course. There will be an intermediate course that will cover the more advanced concepts of digital assets compliance. Nevertheless, now I will cover about this particular course. Basically, we are actually targeting this to the compliance professionals who wants to obtain a foundational comprehension about digital assets and the key related issues, so that they are better equipped to handle such topics when they encounter them in their work. And as we can see, more and more firms, including traditional financial institutions, are getting into the digital asset space. So we think that this training will be very much limited. Of course, the course is also open to other professionals who wants to know more about how compliance is done for digital assets. We welcome those professionals to register for the course also. So basically, this is a 7-hour course conducted over 2 evenings, covering 3 modules, from the fundamentals of the crypto asset ecosystem to the understanding crypto and financial crime. Last but not least, talking about the regulations and the compliance requirements of digital assets. On the first module covering on the fundamentals of crypto assets, the learners will get to know how crypto assets are decentralized peer-to-peer technologies that allow users to transact with irregulated intermediaries, and they could be used in use cases like payments, and the adoption is growing. And while there is a small portion of these crypto assets being used for nefarious activity, but due to the traceability property of crypto assets, and that many countries are now regulating crypto businesses, this helps to reduce the prevalence of the crime. Next module we cover on the understanding of crypto and financial crime. So basically, we will talk about how crypto assets are useful for online criminals, such as state actors. However, in terms of use by the terrorists, there's no evidence of widespread use, while there are some incidences of terrorist financing. Learners will also learn about the common methods of laundering crypto assets, including the use of privacy wallets, privacy coins, chain hopping, and even unregulated non-compliant exchanges. And then we will cover a few case studies. Lastly, we will talk about the regulation of crypto assets and the compliance requirements. Learners will get to have a global view of the regulatory development of crypto asset regulation, starting from the Financial Action Task Force providing the guidance, and also see how the regulatory approaches across APEC region varies, with some countries regulating while others prohibited some of the activities. And then learners will get to learn about the key components of crypto asset compliance, from blockchain analytics to risk assessment and virtual asset service provider due diligence. Lastly, you'll learn about some of the emerging issues and challenges related to crypto asset compliance, from the implementation of the travel rule to unhosted wallets, last but not least, on decentralized finance. So these are the entry requirements. Applicants should have at least a polytechnic diploma. And for those who do not meet the minimal entry requirements, you could be considered on a case-by-case basis. You have evidence of relevant work experience or competency readiness. The first run will be from 13th to 14th of October, from 6 p.m. to 10 p.m. Singapore time. Currently, the mode of training will be online synchronous via Zoom. Registration period will be from now until 6th of October. Those who completed successfully will be awarded a certificate of performance. The cost fee will be $500 Sing dollars, as this course is supported under the NTUC UTAP fund. So NTUC members will enjoy 50% cost fee support of up to $250 each year. What it means is that if you are NTUC member and you have not tapped onto the UTAP fund, the cost will be only $250. And as a launch promotion, in collaboration with BFSU, we will be providing all successful applicants with complimentary BAS individual membership, which comes with NTUC membership, worth a total of $149, so that you could enjoy the benefit of the course. Last but not least, this is how you could apply. This is the QR code. We will send this deck of slides to all the registrants for this webinar, or you can visit the Singapore Blockchain website at singaporeblockchain.org, or at the GFI website, globalfintechinstitute.org, to find the links to register for this course. Yeah, so that's all for my introduction of the course overview. If you have questions, I encourage you to submit your question in the chat box below the Zoom link. Meanwhile, I'll hand over to Yvonne to continue the MC. Thanks.
Thank you so much, Hock Lai. Wow, looks like a very content-rich training course, and then with great incentives thrown in as well. So thank you very much for helping us to launch this course, Patrick, as well as Hock Lai. I think we do anticipate that there will be a great sign-up rate, and we look forward to completing and seeing the very first batch of graduates from this Digital Asset Compliance Foundation course. Now let's move on to the second part of today's event. As you all have seen when you signed up, today's webinar is titled The Good, Bad, and Ugly of Digital Assets Compliance. It is clear that compliance of digital assets is gaining visibility across the world. I'm sure all of you here would agree with me. It provides a competitive edge for some while creating huge challenges for others. This morning, we have a great panel of speakers who will discuss about the good, bad, and ugly of digital assets compliance. I would now like to hand over the time to a man who many of us will be very familiar with, Nizam Ismail, founder and CEO of Eticom. Nizam will moderate today's panel. Over to you, Nizam.
Thanks very much, Yvonne. And very good morning, ladies and gentlemen. Welcome to this morning's session discussing the good, bad, and ugly of crypto compliance. I'm very privileged to have with me a great panel of speakers. Chris DePoe from Elliptic. He's actually based in the US, and thanks for joining us at this very odd hour. Zach Yang from FOMOPay, who recently made the news in terms of having his scope of licenses being expanded. Asman Hamid from Upbit. He is no stranger to the BAS community. Now, a few years ago, if you spoke about crypto compliance, this is pre-2017, what you will receive is a blank stare, or worse, a chuckle, right? Crypto compliance is just an oxymoron. But thankfully, the world has changed. So with cryptos becoming more mainstream, think about DBS Bank, the biggest bank in Singapore, starting an exchange. Other major banks, providing other services like crypto custody. Think about CBDCs. Even the central bankers are getting into it. And MES recently announced a competition. They've shortlisted the 15 finalists for the CBDC development program. So cryptos are now subject to mainstream regulations. Everybody is familiar with the PSA. In fact, I always tell the crypto community, you guys are special because there is a specific AML CFT notice just for the crypto guys, right? So that's because the mainstream regulations just aren't good enough. So they're not good enough for crypto. So crypto compliance has become front and center in terms of focus. So in this 15 minutes or so, this panel will discuss things like the evolving regulations. We're not going to go deep into it, but even in Singapore, if you think about the PSA, the PS Amendment Act, the Omnibus Act, all these will have direct impact on crypto players. If you think about international directives, the FATF with their guidelines, their red flag report, and lots of discussion about the travel rule, and how really crypto and payment enterprises are reacting, and how compliance within the crypto asset space is evolving. So I'm going to start over with Chris. From your point of view, from where you are in Elliptic and looking at global developments in regulations, are regulators getting it right? Is there over-regulation already, or are there gaps in regulation? Or are regulators confused? Because even if you look at the region, in Singapore, we regulate cryptos as digital payment tokens. In Malaysia, they're regulated as securities. In Indonesia, they're regulated as commodities. Very different product classes and very different approaches to regulation. So good, bad, or ugly? Chris?
I think ugly is unfortunately the best response for this specific case here. And I just want to say thank you again to my fellow panelists and to the organizations for hosting. It's a great opportunity to speak with you today. When it comes to crypto regulation, I think that largely the regulators have taken the right approach, which is to take the principles that we see from a fiat regulatory perspective and apply them to the crypto world. The challenge there, obviously, is that there isn't always one-for-one parity for what the attendant risks related to a given activity are. So a transfer of virtual assets, for instance, may not have the same inherent risk as a wire or an ACH transfer might. Largely, we have seen an attempt to regulate across the world in every major jurisdiction that certainly we operate in, and largely in all the jurisdictions in which the industry is centered. I would say the biggest challenges that we face currently are some of the things that were alluded to, which are the fact that you will not necessarily treat a given virtual asset the same way in a particular jurisdiction. So in the US, for instance, and in lots of sort of the Western world, there's something called the Howie Test, which determines whether a particular virtual asset might be a security based on whether it forms an investment contract. In other portions of the world, such a test doesn't exist, and there's more of a civil law classification as to whether a given virtual asset should be classified as a commodity, a security, et cetera. So when you have that type of regulatory gray area, it can create a large hurdle in determining what the proper classification of a virtual asset is. So although there is an ongoing effort to sort of better refine definitions, until there is a specifically tailored body of regulatory law that addresses virtual asset compliance, I think we're going to be left somewhat in somewhat of a limbo in determining how to apply these fiat-based concepts into the virtual world.
Thanks so much for that. Azman, your thoughts from looking at legal and compliance issue in this part of the world? There's a lot of regulatory developments. Do you think there's been enough robust discussions with regulators before introducing new regulations? Is there still a regulatory arbitrage problem within APAC? What are your thoughts? Good, bad, or ugly?
Yeah. I think it's also quite bad in terms of I would come to that conclusion simply because of the fact that we clearly are moving into a new world in terms of embracing this new digital world, and with that there are changes in the current system, and I think there's not enough of a discussion between the industry or the market players and the regulators or the supervisors per se, or the people who are responsible for putting up the laws and regulation pertaining to this space. So, I mean, let me address it on a number of layers. Obviously, on the first level, I think in Singapore, from a Singapore perspective, there has been some initiative or measure on the part of MAS. I think we have to thank them for at least embracing engagement, because they allow to a level of degree, some level of public consultation when they introduce a new regulation. I think, as you might know, I mean, clearly they ask for feedback, and they are taking into some of the response from based on the proposed regulation that they intend to implement. But the problem then remains that there are no further discussion or engagement following that consultation, the public consultation process. And I believe this is where the disconnect is, and where I think there could be further improvement to this process, given the fact that we are dealing with a new technological innovation, we are dealing with new business model, and to apply the old set of models to the new without a proper engagement of how things works will create a real mismatch of regulation and regulatory compliance. And I think this is some of the challenges that we face initially, but I think these issues over time will obviously naturally resolve itself out. But and as well, you would know, I mean, there are various nuances to the interpretation of laws and regulation, and any sort of clarity from the regulators and supervisors, how they intend or wish or expect the compliance to be had is important. And I think this is where we can talk about the standards that are relevant and applicable to the players. I mean, as you know, in terms of some of the issues that came up, in the last 2 years in terms of the definition of e-money, stable coin, the caps and flows in the PSN has caused a tremendous amount of noise in the market in terms of what exactly it means and to what extent it applies. So, these are the areas where I thought that better engagement from the regulators, supervisors, and the legislators, could coming together with an industry body like Blockchain Association, could I think, facilitate a better way of introducing or implementing or establishing some of these regulatory compliance regulations.
Thanks. Do you think that there is a cause, Azman, for some international standard setting norms to be established? Because, we've got international standards for banking, we've got international standards for securities, in IOSCO, even in insurance, we've got international standards as well. But there isn't an international body for regulating cryptos. And of course, compounded with the fact that some regulators look at cryptos closer to certain product classes, which could be different, right? So what are your thoughts? Do you think that there is a need for international standards?
Yeah,
and then Chris, on this as well.
Yeah, I definitely would agree that there must be some level of harmonization in order for this whole industry to be really successful. But again, I think as you alluded to, the challenges are the fact that, and also as Chris referred to earlier, the fact that there are different characterization, legal characterization that applies within each country. And I think this is where the biggest challenge, because the laws of different countries applies the application to the definition of the different digital assets, and accordingly how it's supposed to be implemented differently. But on the flip side of that, I would say that at the end of the day, and I will touch upon a bit later on, the objectives to mitigate the risks are the same. And it's no different from today's in terms of AML, KYC, you're talking about some of the cybersecurity issues, maybe even to the extent of duty of care and transaction monitoring. They are all the same as what it's just the question of how do you apply that. And I think when you start from a common starting point, when you're looking at risk and how that can be implemented, I think that's where we can start looking at harmonization. But in the short, I definitely agree there must be some ways of harmonizing some of the standard, taking into account obviously the particular nuances in the local laws.
Thanks, Chris. Your thoughts?
I agree with that entirely. And I would just echo a point that Asman made earlier, which is that regulatory nuance on a jurisdiction by jurisdiction basis is going to be incredibly important, particularly when you're talking about sort of international coordination and attempting to harmonize regulations globally. I think that the way that you can do that in an appropriate manner without sort of impeding on the regulatory sovereignty of a given jurisdiction is to have a principles-based approach. So every country in the world will seek to implement the 5 pillars of an AML program within the virtual asset space. And so long as those 5 pillars are being met, which are sort of industry standard globally, I think that, the actual method of implementation is less important, right? It's almost like being a technology agnostic regulator. A regulator may not care how you get the job done. They care that you get the job done. And so as long as we're keeping illicit funds out of the system, preventing, instances of terrorist financing, things like that, you'll see global coordination be very effective. Where there may be some consternation and some sort of issues still up in the air are around activities that may or may not be impermissible in a given jurisdiction. So I'm thinking about things like market manipulation, pumping, et cetera. Right now that it's largely unregulated within the crypto space in many prominent jurisdictions. Slowly but surely, we're seeing a growing sentiment that there needs to be something done about that, and that you can't have these sort of highly volatile and subject to manipulation type cryptocurrencies, tokens, coins, what have you, and there does need to be some market regulation. But until you see greater harmonization in that space, it's going to be very difficult to have sort of one voice with which the industry speaks.
Yeah, I think my gut feel is market manipulation is a real issue. My gut feel is that we probably see some regulatory initiatives going forward. I hope we do, because if you look at the reputation of the industry as a whole, I think that has to be sorted out. Zach, I'm going to turn to you. As a CEO in this panel, again, congratulations to FOMOPay for expanding your suite of licensed activities. What are your thoughts about compliance? Do you think it's critical for your business? Maybe you could share your thoughts on this.
Yeah, sure. Thanks, Nissan. And just actually echo to this topic. So actually, we are actually trying to be the good guy here. Yeah, as I think we are really speaking together with all the industry expertise into the legal and the compliance perspective here. So I'm more actually representing the business side. So from the business actually perspective, what I try to really complement to this panel is really what's actually how the business actually person is viewing the compliance as well. So as you may know that actually FOMOPay, we have been working very closely with all those like a traditional financial institution, and also work with a lot of central banks actually in the past few years. So personally, we are also sitting in the World Economic Forum with their digital currency governance consortium. So this is all the global initiatives that actually we are discussing. What's really the perspective that actually we can really bridge the gap between the business and the compliance. So for the crypto space, it's actually started from the business use case. So blockchain, or actually the first use case, Bitcoin, actually started as a kind of the digital asset. And no one actually really thinks that actually it can be used actually for the payment token. But along the way, actually, people are really so innovative and found actually all the different various of like use case coming from this like DLT technology. So that's where I think actually compliance actually come to the perspective and try to also protect actually all those like so-called the innovative usage of the technology. And where actually we see here as an opportunity for formal pay as well, because right now for all those like crypto transaction, more than actually 99% of the transaction is done in an unregulated way. And for formal pay, why actually we have been working so hard actually for last actually 20 months, try to actually get this the first so-called the DPT, digital payment token license from the central bank. It's also we try to actually increase the number of regulated crypto transactions. So because we know that right now the crypto world actually it's always actually transacting within itself. And for the fiat world, all the actually banks, they are also transacting within their own ecosystem. But there actually is a huge gap to be filled between the fiat world and the crypto world. And really the common language that actually can really translate in between these two words is really the compliance. How we really do our KYC to make sure that we know who is the sender, who is actually the counterparty we are transacting with, and also the transaction monitoring. All in the crypto world, we know it as a know your transaction, how we do the KYT. So we know that actually where actually is the source of such transaction, how we really make sure that the transaction actually we received or we transacted is not really related to the criminal party, not really related to the potential money laundering. So that's really the job that actually we think as a business side, actually we can really done better, but really taking advantage of the compliance. So I think that's really the new opportunity actually for all those like, I believe there are also a lot of business owner here, in the audience. So I think how really we can really bridge the gap here is really something can really create a larger pie and the value actually together.
Thanks, Zach, and it's great to hear a CEO talking about the importance of compliance. Azman, you've been in banks before, and you've done fintech, and now you're in a large crypto exchange which has got presence in many jurisdictions. From your perspective, how is crypto compliance different from conventional financial services compliance? So are the risks different? How would you look at things?
I mean, the way I see it, I think sort of referred to earlier, the fact that I think the objective of managing risks or mitigating risks are essentially the same, in terms of whatever financial services that you offer as a business. Essentially, the fact that you are trying to mitigate against the risk of money laundering, CFTs, terrorist financing, and so on and so forth. But what I would say is different is the manner of technological platform in which a lot of these new financial services are being offered. And I think this is where the challenge is for the regulators themselves to understand the nuances, as I said earlier on, in terms of the business model. And of course, we can, immediately question comes to mind about DeFi, for instance, right? How do you regulate an autonomous system or process? So, I mean, coming back to the point, I mean, we all know that cryptos itself is also cross-border. It's focusing on blockchain and smart contracts, which is essentially different from the current system where you have different layers of intermediaries, where you have settlement. In order for you to do a transaction, you have a lot of middlemen who are brokers, who are settlement agents, who are custody agents, all of this who play different parts of the role. But in a blockchain, this whole system is just conducted autonomously. So in terms of the old ways of managing the risk, is what I'm trying to say is quite different, because you have to apply a different set of thinking, or in terms of the lens that you are trying to look into those risks and how to effectively manage those risks. And I think today, a lot of the things that in the AML and the KYC world, and I think we can of course talk about it a little bit more, is to the extent in which the current regulation is trying to impugn on the risk of money laundering on cryptos. I think a lot of it has been overstated. And this is, I think, in part trying to understand. When I came back, I think, let me give you a bit of an anecdote. When I came back from Europe 2018, I walked to a bank, and the first thing I asked about Bitcoin to the people there is that most of the thing says that Bitcoin is a fraud. Fast forward, I think, 2.5, 3 years right now, and clearly, the adoption has increased very significantly. That's reflected in the price, and therefore there's a lot more interest into this space. But I think what people fail to see is the bigger issue here that we are looking at, the underlying technological innovation that Bitcoin or blockchain is bringing to the fore. And this is where I think the main difference that people need to understand and how to manage the risk in relation to KYC, transaction monitoring, and cybersecurity. How do you apply that to the current risks that you're trying to manage or mitigate? So those are the differences. And as I mentioned, there will be a challenge to some of the business model relating to DeFi. And I can't wait for how the regulators are going to tackle this.
That's interesting. Thanks so much for that. And I think some of these issues will be covered in the course that Hong Lai presented earlier. What are some of those crypto-specific compliance issues? Zach, from your point of view, I think Azman alluded to the fact that what's different is the nature of the blockchain in itself, right? I mean, you must. I've been quoted that you must be an idiot to want to launder your monies using Bitcoins, because there's a complete audit trail of your laundering efforts. From your point of view, you're very much in the RegTech space. How do you see RegTech tools evolving to facilitate crypto compliance?
Yeah, thanks, Nissan. Yeah, so I think RegTech is something that for sure that actually as a licensed party, definitely you need to actually keep investing because the risk really actually high actually in all those like a crypto transaction, it's also actually getting actually higher and higher. So what actually we can say actually, yeah, what actually MS actually is also discussing for a lot of like a public like a guideline. So they are also actually putting more actually enhancement in also like TIM, technology risk management. In this crypto world, all those like a transaction, it's all actually done actually in the actually technology framework. So that's why actually you keep seeing some of the news actually talking about some of the crypto exchange getting hacked or here and there or something. Yeah, because actually all those like security actually risk is also actually getting actually our actually business compromised. So also like this like a compliance side is like this. So if you don't invest, okay, then you save a lot of cost. But once actually there is one problem happened, wow, that's all the actually costs that you cannot really afford. So that's why I think actually for FOMO, actually we also keep actually investing in this actually RegTech side. So we keep actually investing a lot in our regulation side, try to actually complement with all those like regulator standard, not only in the Singapore standard, also as an international standard. So as actually travel rule being discussed, so a lot of actually international provider also trying to actually design actually the best standard actually in the industry. No one has a perfect answer yet, as the panel actually just mentioned, because different groups in different actually part of the world, they also have a different opinion. But I think we are also trying to get into the consensus. Yeah, like what actually the travel rule is actually getting closer there. So we think this is something no one has a perfect answer yet, but we can at least actually have a better answer than today. So that's how we really protect our business.
Yeah, we'll get to the travel rule in a bit. Chris, turning to yourself now. I mean, from Elliptic's point of view, have you seen, what are your thoughts about how RegTech solutions will develop for the blockchain industry going forward?
Yeah, I think the continued expansion of sort of surveillance and monitoring technology, which are obviously features that we focus heavily on at Elliptic, will sort of define the industry. And being able to appropriately track and trace movements of value on the blockchain is sort of imperative to determining whether or not that value is moving to an illicit party, whether or not that transaction may have a nexus to a sanctioned individual, criminal activity, what have you. I think maybe something that is sometimes overlooked that's likewise important is the implementation of a bridge between your fiat systems and between your crypto monitoring systems, and a RegTech solution that sort of bridges the gap between those things, and that can help present a holistic risk rating of a customer, if you're from a financial institution or a crypto exchange perspective, is extremely important, because without understanding the totality of the risk presented by a given customer, you're really only working with half of the information, and you may be missing an entire leg of risk that hasn't been appropriately identified by your firm. One of the major challenges that we see is the fact that, unlike a lot of your traditional fiat products, there aren't necessarily sort of industry standards for a lot of these things yet. And we rely, and really more broadly, financial institutions rely on third-party service providers rather than in-house solutions. So naturally, you have less control over your environment that you're operating in, and the tools are sometimes less customizable. And that's why working with a systems integrator to ensure that your fiat systems works with your crypto system, which works with your travel rule solution across both crypto and fiat, that those things are all able to talk to each other and are able to sort of give you a composite view of what your customer actually looks like, are so important. The technology exists. We have the ability to launch solutions today. It's a matter of making these systems talk together and delivering an all-in-one fit that presents a challenge to us currently.
Thanks for that. I think just on the issue of RegTech, I'm reminded of this conversation I had with a very senior head of compliance in one of the major financial institutions. I'm not going to name names. This conversation took place probably about 2008, and we talked about RegTech solutions. And his response was, "I don't believe in RegTech solutions. It's too expensive. I might as well hire armies of people." So I bet you if I have the same conversation today, he will say something very different. Let's turn to the favorite topic of everybody, which is a travel rule. So it is not it's not something that we are barred from traveling given the COVID environment. I think everybody understands what it is. Azman, you sort of mentioned it earlier. Do you think there are still impediments to rolling out an effective travel rule protocol? And what are those impediments?
Yeah, thanks, Nizam. I think part of the reasons why I'm in this position to be able to answer this question is because, our affiliate company, Verify VSP, just recently launched their travel rule solution, being the first Singapore-based entity or travel rule solution provider here in Singapore. So, if there are people here who are interested in having that conversation with me, please feel free to reach out to me after the panel session. Happy to fill you in on what we are offering. So coming to the questions, essentially in terms of the impediments, of course, I think given the fact that, it's a very recent phenomenon, if we were to compare travel rule to the current banking system, we are talking about SWIFT system, which basically took about 7 to 10 years before it was really bedded down amongst all of the banks around the world, in order for them to be able to share a data messaging system. So essentially here, the other challenges, like I referred to earlier, because the fact that a lot of this is on the blockchain, the transfer, meaning of the digital assets. But, because, then you are supposed to provide this KYC information to your beneficiary immediately and securely. So this is the two twin pillars in which the digital asset, the KYC information to be transferred in line and simultaneously with digital assets. So that's why I think technologically it was a challenge for the industry as a whole. But I think a lot of the travel rule solution provider that I was looking at has obviously overcome this challenge, and they are able to offer. So then the next question remains about, its reliability, so audit requirements, and over time, there will be some level of interoperability. So these are some of the earlier issues and consideration. And I want to add to that clearly. The fact that we sort of mentioned earlier, the lack of a global coordination among all of the parties, that I think is one of the major challenges that I see in rolling out some of these travel rules, because the fact that the principle-based solution that FedF has offered in travel rule has not been adopted in all of those countries as yet. Singapore is primarily one of the first in the world to embrace it in the PSN 02. But as far as I know, in the US, that's I think it's already there. But in the EU, in Europe, the MiFID is still considering, they have a proposal in place, but it's not been rolled out yet. So this again will basically lead to a host of difficult issues. The fact that FedF has identified or basically suggested that travel rules should only apply to regulated service providers. So if those regulated service providers are not themselves, required under their local laws to apply travel rules, then basically it begets the problem and the issue here. Who do you transfer to? What sort of assessment are you required to do in regards to the service providers, and also privacy issues? I mean, in EU, the GDPR are a lot more stricter than most of the privacy laws in other countries because it's got extraterritorial reach. And potentially there could be a conflict between GDPR and the travel rule itself. So what I'm saying is I'm just identifying a whole host of issues and challenges. And these are typically referred to as the early sunrise issues, because in any implementation of the law, it takes a while for the community to come together to embrace it. But what I'm seeing is, there's a clear effort from the industry as a whole to come to terms with this. And I think, we are obviously day by day closer to find some sort of a resolution to some of this issue. But I see it's coming to it's coming to the fore, and it will remain with us for a while in the near future. I think the only hope there is a greater coordination among the stakeholders to try and find some sort of a harmonized standards and application of these rules.
So Osman, good, bad or ugly travel rule?
It involves all of them.
Thank you.
Yeah,
such a politically correct response. Okay, you sort of mentioned DeFi. I'm going to turn to Chris right now. How should the compliance community look at new developments like DeFi or NFTs, right? And Singapore is definitely in the news for NFTs as well. Interestingly, Ravi Menon, the MD of MES, actually said this fairly recently that in thinking about regulations, he thinks we should not think about the persons running or the entities running the platform, but the actual mechanics of the platform itself. So it might be the case that MES might regulate the mechanics on the platform rather than the entities. So that's quite interesting. But your thoughts, Chris?
I think that generally the compliance community should be optimistic about the sort of growth and expansion of the DeFi world, including NFTs. And, the reason for that, it goes back to something that Zach said earlier that I think is very important, which is that compliance is good for business ultimately. If you want your customers to believe in the safety and soundness of the ecosystem that either you operate or that's autonomously operated, depending on sort of your regulatory perspective on how that form of control works, you need to ensure that people know that they're not dealing with a fraudster, that they're not supporting, illegal activity that they may have either a moral or legal compunction against supporting. And in order to do that, you have to have active compliance systems in place. With NFTs in particular, it's sort of a unique risk because you're not only dealing with your traditional, or I don't know if traditional is the right word, but your crypto style financial crimes risk typologies. You're dealing with sort of general art market style money laundering risks as well, right? Who determines the price for a given NFT? If it's bought for $10 and is sold for $100,000, how do you account for that delta, and how do you ensure that bad activity hasn't taken place? These are largely still open questions, but it's an exciting area. And what we have seen is that there's already been strong regulatory engagement globally on these questions. It's been in the news recently that several large DeFi protocols have been investigated by various regulators internationally, particularly ones that are involved in sort of decentralized exchange activity. And I think the question is ultimately going to be, when you talk about regulating these entities, what does it mean to have control? Are governance token holders, for instance, beneficial owners of an entity that would have the attendant rights and responsibilities of ownership? And does merely launching or operating an implementation of a given DeFi protocol, so say owning a website or a domain name, what have you, and allowing the implementation to operate under your auspices, does that bring you into international scope as a VASP? I think it's going to, frankly. And I think that a lot of these different DeFi protocols are going to ultimately have to establish some form of, if not centralized control, a point of contact for regulatory engagement. And we're already seeing that. But as the space expands more, as there's more and more money to be made, regulation should be welcome as a way to ensure the safety of the system.
Nizam, if I may add to that.
Yes,
I mean,
please.
I fully agree what Chris has stated here, but I just wanted to throw a flip side to this whole equation in terms of, regulations. I mean, are we clearly over-regulating some of the space? In terms of the balance that we try to seek. I think you alluded to what Ravi Menon said in terms of, stimulating innovation while at the same time managing the risk. And I think that's a very good balance that we can try and strike here. And I think when you think about some of these issues and concern, let's go back into first principle and look at the objective of the risks that we are trying to mitigate, and whether or not, we can achieve that in some other practical form and shape, rather than, going through a whole set of process and trying to define each and every risk and looking at mitigating them. So I think it's important as a whole, that this is why I was advocating for a stronger coordination between engagement process between the legislators or regulators with the industry body, because I think there are other ways and means in terms of to try and mitigate and manage those risks.
Okay, well, we have a question from the audience, and actually we would encourage that. From Adam to hosts and panelists, what are crypto firms' views on tumblers and mixers? Do you generally report STR and exit the customer, or tag them as high risk if the customer of the VASP receives DAs and send a digital asset to mixer addresses? And he says there's an argument that the customer is not liable for receiving DAs from mixers. So what are your thoughts? Anyone who wants to jump on this?
One thing I could throw in on that topic, I think there are two separate questions here. One is, what is your strict legal obligation? One, what is the right thing to do from a risk management perspective? From a strict legal obligation perspective, it's likely true that there's not, an inherent requirement that an entity receiving funds from a mixer be exited or have any, sort of punishment or fine, what have you. From a risk management perspective, if not exiting that customer, then certainly applying much more stringent controls, risk scoring points, et cetera, and monitoring the ongoing activity of that customer is important, because you just know that there's a higher likelihood that you're going to have problematic activity associated with a mixer or a tumbler. And frankly, we at Elliptic, we design our system so that our customers can really take the risk management lead and define thresholds as they deem appropriate. But one thing that I think is fairly universal is the fact that if funds are derived from a mixer or a tumbler, then certainly additional risk control should be implemented around that customer.
Yeah, absolutely. I think from a practice standpoint, when we receive a risk alert relating to a receipt of funds from a tumbler, knowing the purpose and objective of what tumblers are being used for, in terms of peeling off into smaller chains and making into smaller amounts, because there's a way to circumvent that some of this monetary threshold. So clearly it will force us to look into greater detail in terms of the profile of the customer, why in the first instance he's using or receiving funds from the tumblers. So there are all these added parameters that we need to assess, as I think Chris alluded to, before we make a decision whether or not it should be. And of course, if it leans in favor towards a more suspicious activity, which cannot be explained away by a reasonable explanation by the client, then certainly we will file that report. And what follows from there, whether you freeze or stop or terminate the account, you will also have to consider in terms of the following action following the assessment.
And that's the great thing about cryptos and being on the blockchain, right? You can tell if it comes from a tumbler or a mixer. Absolutely. Whereas for banknotes, you won't know where it comes from. So please keep those questions coming in for the audience. I'll come back to the panel and talk about the issue which is at hand, which is compliance training. So I remember when I first became a head of compliance, I received no formal compliance training, right? It was just by virtue of the fact that I started my career as a prosecutor and then became a regulator with the MES, and therefore I was de facto assumed to be suitable to head up compliance. But I'm not sure that the world that we live in right now will allow for that to happen. There are some compliance training courses, but I don't think that there is, as things stand right now, a crypto-focused compliance program. So I'm glad that there is this initiative done by a few stakeholders to put this into reality. I open this to the panel. I mean, your thoughts on the relevance of having crypto compliance training program and what should be the objectives of such a program. Osman, do you want to kick off first?
Sorry, what was the question again, Nizam?
What are the relevance of a crypto compliance training program, and what you think should be some of the core features of such a program?
I think, of course, when we're dealing with somebody experienced as you, having in the industry, so, having the similar type of compliance training may not be necessary or relevant. But for people who are just coming into this space and obviously not fully aware that, the use case of Bitcoin is more than just the fact that it's now at $56,000 US dollars, one Bitcoin. That you get a chance to make money. There's a lot of learning that you need to have, maybe guidance in terms of, the use cases, how does it apply? What are these innovation that we are talking about here? These are all important points that you cannot just transcribe. For me personally, my journey towards digital asset compliance, of course, the fact that, like you, I begin my life as a career as a lawyer and legal and compliance in a bank. But, from there, the transition to the digital asset space took a while as well, because I need to get around in terms of this technological concept of what smart contract is, how does the autonomous nature of some of the system works, and how do you then implement the monitoring? So, I had to supplement myself with some of the online learnings as well in order for me to come to terms. But then once the regulation is in place and understanding what it seeks to do in terms of the objective to mitigate and manage the risk, then the challenge then is how do you then apply the way your business work to comply with those regulations. And I think this is where the course can bring the most value, because a lot of the instructors that you're going to get here, as I think Howie can explain a little bit more, are practitioners from the market. So they've seen this firsthand. So they've implemented or established the system, and they've seen how it operates firsthand. And then obviously the knowledge that they have gleaned can then be shared across to people who are, obviously very interested to come into the space. So I think that's the real value of the course itself that you can see.
Thanks. Zach, your perspective as a CEO, how do you see the relevance of a crypto compliance course for your organization?
Yeah, I think it's very relevant. And actually, even for me, I think a lot of a fellow audience here. So you are also the director of the company. So you know that actually, if you actually hire some compliance person, or outsource to some third party, it's kind of like really protecting you. But if really something happen to your business, then you are still the one actually taking the full responsibility. So MS will always actually chase after you. So that's how important actually we are. I do actually have one of the fellow friends. I won't be able to disclose the name, but they have a huge actually campaign internally in the company called "Keep CEO Out from the Jail." So that's how important that the actually compliance is. So I think investment into all those compliance training, at least actually you can really try to really, I think, actually enhance all those really the bottleneck to really raise up the awareness actually within the organization itself. Try to make sure there is actually not any loophole, because yes, maybe your compliance team is actually very strong, but maybe actually some other team, they are not really well trained. Then they are the one actually triggers a red flag. So that's, I think, something. Compliance is something we realize we even also internally inside Formal, we also do the training across the whole team just to make sure that actually we don't have that actually the bottleneck.
Thanks. Chris, your thoughts on what you like to see as some of the core components of a crypto compliance training program?
I think that the training itself does, as presented, and should continue to focus on basic AML risk typologies and their application to the crypto space. For me, the real key is to not reinvent the wheel. We know how money is laundered. We know what illicit movement of funds looks like, and it's applying the knowledge that we've already accrued in the fiat space and applying it into the crypto world that I think is really important. And given that sort of ongoing training for compliance officers was one of the 4 foundational pillars of an AML program when that guidance was first promulgated years ago now, obviously the industry takes it seriously. And I think it's important that we as a service provider do as well. And in developing course content, so long as you're focusing on your standard AML fiat risks and then integrating crypto specific risk based on 2 things. 1, technological risk, right? So different ways that you can achieve the same nefarious ends. And then 2, entirely new risks that are sort of specific to the crypto space and that you wouldn't have traditionally seen in a money movement or money transmitter setting. I think you can adequately account for all the risk, or I don't want to say all of the risks, but the majority of the risks that may present themselves and hopefully mitigate them upfront through an adequate training program.
Okay, so the training program is definitely the good in the good, bad, and ugly. I think really, if you think about the fact that crypto regulations are very quickly evolving, there's still a bit of gaps. So there will be more regulations going forward. And I think it is also fair to say that regulators are paying very, very close attention to crypto players, right? For good or bad. I mean, we are going to be subject to more rigorous scrutiny, I would say, compared to other payment firms. That's just the nature of the beast. So a course like this would be very critical, I think, in developing the ecosystem further. As I always say, good compliance is good for business. So I think that's all the time we have for this panel discussion. And thank you very much to the great panel members. For the rest of the community, please keep this conversation going. If you want to find out more about the course, get in touch with the Blockchain Association. And thanks very much for your attention. And I hand you back over to Yvonne.
Thank you, Nizam, Azman, Chris, and Zach. That was a really interesting and robust discussion from all of you. We just want to ask all of you to just stay online for 1 second. There's going to be a group photo taking just to mark today's inaugural launch of the Digital Asset Compliance Foundation course. So if I can just ask all participants on the panel to just hold your pose for 30 seconds so that we can take the photo. Okay. Thanks, everyone. So on behalf of BFSU, GFI, as well as NTUC and Elliptic, want to thank all participants for joining us this morning. We trust that the very interesting discussion led by Nizam has helped everyone to learn more about digital asset compliance. So to further enhance your knowledge, of course, please consider participating in the Digital Assets Compliance Foundation course. We will be sharing the details of the course with all attendees. So the deck that Hock Lai presented earlier, that will be distributed to all participants. And of course, if you would like some guidance on enhancing the digital asset compliance for your business, to borrow Zach's friend's words, to keep yourself out of jail, you're welcome to reach out to me or Chris DePaul. We're representing Elliptic. We're happy to share our knowledge with you. And on that note, I would like to wish everybody a wonderful day ahead, and we'll see you at the next event. Bye.
Okay, thanks everyone.
Thank you.
Thank you. Good night, Chris. Yeah.